I'm about to break down the latest from Jackson Hole. Powell's leaning toward rate cuts to protect jobs. But there's a twist. He hints at stagflation risks and calls tariff inflation a one-time issue. We disagree with this policy, but guess what? We still made money in energy, Bitcoin, gold, and uranium. Stick around to find out how we did it.
Gary, thing number one, again, as I mentioned, we're talking about Chairman Powell. He is all the rage. It's almost like this hero, villain, villain, hero. No matter which side you're on, you have one or the other, right? With President Trump. Thing number one, Powell at Jackson Hole hints at rate cuts. Here we go.
Well, so it's interesting that you talk about the hero villain aspect of it. I'm on record saying I disagree with both sides. I think Chairman Powell, he's done a poor job. He kept rates far too low for far too long. He was very slow in raising rates. He was far too early to start cutting. And a ton of the inflation that we have right now is due to his actions, and on his watch, he's responsible for that. He hasn't done a good job. However, President Trump criticizing him in public in the way that he has, I think is counterproductive. And basically trying to berate him for lower rates, I think is beyond unseemly. It also isn't going to get him the result that he wants. Lower overnight rates are not going to lead to lower 5 and 10-year rates. Those are the rates that people use to borrow. So I don't think that gets the solution the president wants. In this matter, we disagree with both sides. So maybe we can say villain on this. Anyway.
Pretty good. That's Powell, good marketing right there too, Gary. I mean,
right.
Geez, keep them coming.
There you go. And by the way, I don't think either of these two men are villains. I just think Chairman Powell has done the best that he could, but he hasn't done well. And I understand why any president wants lower rates and bigger economic growth, right? That's ultimately how American presidents are judged. I understand why President Trump wants it. I just don't think the way that he's trying to go about doing it is going to result in what he wants. That doesn't make him a villain. I don't think he's a bad guy for wanting more economic growth. I just think the way he's going about it is not going to get the result he wants.
Gary, and for DKI subscribers that are listening to this right now, I think you know the question that I'm going to ask, but I have to do it. With these likely rate cuts, I mean, what are you doing for the DKI portfolio? What does that look like? What's going to happen? And apologies for those that already know what this answer is going to look like.
Yeah, well, let's start with end the Fed, but I'm not going to get that, right? That's always number one on my Christmas list. But you know what, Rob? Let me answer that question in two parts. The first part of it, let's talk about what the chairman said at his Jackson Hole speech. Basically, what he did was he talked about the fact that we have inflation that's too high. Tariffs may lead to higher inflation. He's saying that'll be transitory or one time. You know, we love hearing that from the Fed, but I actually agree with him. I think any inflation coming from tariffs will be transitory. It will be one time. You know, we made fun of him for that a few years ago, but I think on this one, he's right. But what he's doing is he's taking a look at a labor market that's a little bit weaker than people had wanted. It's not awful. And he's saying the balance of risks is now in favor of the labor market. And what that is just sort of a subtle way of saying that what he'd like is higher rates to control inflation, but lower rates to ensure we remain at full employment and that people are able to get jobs. Those two desires push against each other. And when you hear people talk about the Federal Reserve having a dual mandate, that's the push-pull of that dual mandate, right? Higher rates for lower inflation and lower rates for higher employment. Okay, that's the push-pull there. And what the chairman is saying is things are now leaning more in favor of the labor market. And the market is reading that, and I think correctly so, that Powell is leaning towards, depending on where the next CPI comes out and the next PPI comes out, and you know we'll get some more economic data, but he's leaning toward reducing rates at the September meeting just next month. Okay, so look, I disagree with that decision. You may agree, disagree. Feel free to put it in the comments either way. You know, if you agree or disagree, just give us the reason why, right? Cool either way.
There's people on the live right now that are throwing things at you, actually, Gary, but that's okay.
Oh, really?
Yeah. No,
that's
I'm
fine.
kidding. Well, they
Oh,
might be,
all right.
but
All right. Just listen. You're welcome to agree or disagree. Just tell me why. Just use the word because, right? Like, you suck, rates should be lower. I have no idea what to do with that. Okay. So here's the thing. I disagree with the decision to lower rates right now, but it doesn't matter what I think. The job here is to make money. And so with a lower coming Fed funds rate, I think what we're going to see is a couple of things. We're going to see a steeper yield curve. Don't panic on that. Just a fancy way of saying lower short-term rates, higher long-term rates. This is what I was saying. The president is wrong in his analysis. If you get lower short-term rates, the bond market will price in higher future inflation and you'll get higher long-term rates. So that would be a steepening of the yield curve. But what all of this does is it juices the prices of risk assets. Well, what does DKI own? We own a huge amount of inflation protection. We own small cap, ultra high growth stocks. We own gold. We own Bitcoin. We own energy, specifically uranium, and more economic growth means more energy usage. A weaker dollar means higher dollar prices of energy. Hey, guess what? I don't know, we don't run one portfolio for everybody, but I can tell you that my personal portfolio was up almost 4% on Friday. That's an enormous one-day performance. And the reason is because whether I agree or disagree with the decision, we were very well positioned at DKI to profit from it. And that's the job. That's what we're trying to do. By the way, worth pointing out, that was before the SE Pharma takeover.
yeah, I mean, Gary, I think you nailed it. And same thing, Friday was also a great day, in the sense that DKI's job, and you've always said this from day one, is to position our subscribers for the market, regardless of these decisions that get made at these levels, right? You mentioned villain, hero, whatever you want to call it. It's interesting.
Yeah.
You're disagreeing with how things are being handled on both sides, right? But a decision's going to be made. And then what decision gets made, that's where we come in terms of already being ahead of that and understanding if this happens, then this. So Gary just continuously doing a great job to position DKI subscribers for whatever happens in the market, no matter who we get in there making what decision using whatever pen.